Welcome back to my YouTube channel. So today we are going to talk about different types of life insurance. So really when it comes right down to it, there are only two types of life insurance. There is whole life and there is term. Of course, in the whole life, they have a lot of different terms like universal life. They are different, a lot of different names that they give those policies. But really, it's when it comes right down to it, it's only two different types and of life insurance policies. It's either it's a whole life insurance or it's a term insurance. And we are going to establish the difference for you in those two different type of policies. There are other characteristics to each policies, but we're going to go with the general distinction between whole life and term. And what we prone is to if you get a quote between a whole life insurance and a term insurance, you would always see that the whole life insurance is more expensive, at least twice. It would be at least two times more expensive than the term insurance for the same amount. So what we are pointing is get term insurance for a lower amount, just like Susie Oman and Dave Ramsey says, get term insurance, and the difference in price, in the cost of insurance, invest that difference into an investment account. So buy term and invest the difference. That's what we put. And why do we look at it that way? Why do we encourage people to do that? It's because when you get a whole life insurance policy, most people tell you, well, you know what, it builds cash value, so you have cash set aside for you. That's why you should get a whole life insurance policy. But this is what they don't tell you. In the first 3 to 5 years, this plan doesn't yield any cash value at all. So it takes 3 to 5 years for you to start seeing any type of cash value in a whole life policy. But if you buy term and invest the difference from day one, the difference that you invest into, you put into that account grows. So that money keep start growing from day one, not after 3 to 5 years. Another reason why we encourage people to buy term and invest the difference is because with a whole life insurance policy, you have to borrow the cash value. Once that policy start accumulating cash value, you cannot take the cash. You have to borrow that cash. But if you buy term and invest the difference, you can take that money because it's your money. You don't have to borrow it. Another reason is when you die, if you have a whole life policy, when you die, they take out the amount that you borrow. If you did not repay that amount, they take it out of the face value from the policy that you had. But if you buy term and invest the difference and pass away during that time, you get the whole face amount for your life insurance, and you get the cash that was deposited into the investment account for you. Also, with the whole life insurance, when you die, you do not get to keep the cash. If you read the insurance policy, if you have a whole life insurance policy and you read it carefully, it will say that you can only get one of the two amounts. It's either you get the cash value or the face value. You cannot get both values. So that means when you die, they get to keep the cash value. Your beneficiaries can't get the cash value. They get the face value, but the life insurance company keep the cash value that they told you you had. When you buy term and invest the difference, your beneficiary get both the face value of your life insurance policy and the cash that they put aside for you. The cash that was in that investment account or in the short-term account, in the emergency account, whatever type of account that you put the difference in, your beneficiary gets both the face amount of the life insurance policy and the money that was set aside for you. Another big difference again with the life insurance policy, they said, it's a paid up policy, meaning at some point the policy is paid up and it would be paid with the money that you have in your cash value. But guess what? At some point, that amount is, because they keep taking money out of the cash value to pay for your policy, the cash value would go down until there is no more cash into that cash account. When that happens, your policy lapses because you stop paying for it because they told you it was paid up, and they kept taking cash out of the cash value to pay for your policy. When the cash it runs out, you do not have a policy anymore. Most people get so excited about having a whole life policy because they said it's going to last my whole life, not understanding that if the policy is paid up and the cash value runs out, you do not have a policy because you would have stopped paying on it and they will not send to ask you for money. But when you have a term insurance policy and you keep paying for it even after the term runs out, you, especially with our company, you get a guaranteed eligibility until age 95. That means if you want to renew the term after the term expires, you can. Of course, it would be at a higher rate, but you don't have to go through any medical questions. You don't have to be qualified for it. You're guaranteed to renewability for the insurance. It would be at a higher rate, but guess what? The money that you set aside in that investment account can pay for with the dividend from that money can pay for your life insurance policy. Because remember, you put money aside over a period of 20, 30, maybe 25 years. So that money kept growing. It kept with compounding interest. So now after the term is over, whatever that term period was, you have enough money set aside so that the dividend on that money can actually pay for your policy. And the policy won't run out because we are not paying for it with borrowed money. We're not paying for it from money that would run out. So you can keep your policy, you can renew your policy until age 95. When you have a whole life insurance policy, if you take all the cash out, you borrow all the cash, you lose your insurance coverage because it's either you take the cash or the face amount. If you take all the cash out, your insurance, you no longer have insurance because you borrowed the whole thing. But with buying term and invest the difference, if you take money out of your investment account, you still have your insurance policy. Not only you still have your insurance policy, but you don't have to pay that money back. And guess what? When you borrow money against your cash value in your whole life insurance policy, they charge you interest. I was looking at a policy last week that a client has, and they said on the policy, they charge 8% interest rate. Can you believe it? The interest rate to buy a house right now is in the 3s, but on your life insurance policy, they charge you between 6 and 8% on the money that you borrow. And if you don't pay it back, guess what? They keep adding interest to it every year so that at some point, the interest will go so much that by the time you die, the first amount that they're going to take that money you borrowed against that first amount, it might be very low what you have to leave for your beneficiary. So think about that when you are going to get life insurance. We definitely recommend you buy term and invest the difference. Let the difference grow for you and get compounding interest and then grow your money while you have life insurance. Because the goal, what we prone, we believe in life insurance, at the same time, we don't believe in life insurance. You would say, well, how can you believe in it and not believe in it at the same time? Well, we believe in having life insurance to start with. But what we show you a plan where you start with life insurance and you invest the difference. But at some point in time, if you follow our system, the money that you invested will outgrow your life insurance. So let's say you had a life insurance for $200,000 and you keep putting money on the side into your investment account. If you put enough money in your investment account, at some point, it might be 15, 20 years. I don't know how long, depends on how much money you put in your investment account. At some point, your investment account is going to grow, outgrow your life insurance policy. So let's say you had 200,000 in life insurance and your investment account grow to 400,000, you don't even need the life insurance anymore. So what we want is get life insurance because you don't have enough money yet saved. You don't have enough money put aside. But once you have enough money put aside, the more money you have put aside, the less life insurance you need. So we show you actually a plan where you can get life insurance and outgrow your need for life insurance. So that's what we want. Buy term and invest the difference. If you have an insurance policy, you would like me to take a look at it for you and tell you if you have a good insurance policy or not, feel free to reach out to me. You can inbox me on Facebook, send me a text or email me. My information is at the end of this video. Reach out and I'll be more than glad to look at your policy. You can take a picture of the first 5 pages of your policy. That would tell me everything I need to know about your policy. If you have a good policy, I would definitely encourage you to keep it, because if you have a policy, you are ahead of the 43% of 350 something million people that do not have any life insurance policy at all. So if you have a life insurance policy, I commend you for getting one. It might not be the right one for you, but at least you made the step. You got yourself some insurance policy, you got yourself some coverage. So there is something to be said about that. You are ahead of the game. It might, like I said, not all insurance is the right fit. For most people, term would be good, not for every single person though. So that's what I said. You need to know what you have, and the insurance companies don't necessarily tell you, the insurance agent don't necessarily tell you all that you have, because, well, most of the time they do not know everything that you have. I found that out for myself when I called my insurance agent from the previous company that I had, and I asked them a question about disability insurance. They said, well, I don't know if we offer that. I said, how do you not know if I have that on my policy? He said, I will have to find out for you. He went and found out. He said, yes, we have it. I said, well, okay, I would like to have it too. He said, I have to find out if you can. He went, called back, and called me back and said, no, you cannot have it. You can only have it when you apply for the insurance. But since you didn't do that, I said, well, I could not have done that, because when I applied for the policy, you yourself did not even know you had that option to let me know about it. But it is what it is. You live and you learn. So if you want to know if you have the right type of coverage for yourself and your family, for your loved ones, feel free, reach out to me. You have my phone number at the end of the video. Send me an email. That would be the best way to get in touch with me, or send me a text. Or like I said, you can also go on my YouTube channel and get in touch with me like that. Best way, send me an inbox on Facebook. Any way you want to get a hold of me, I am very easy to get a hold of, and I respond to my text and phone call within 24 hours on most days. So definitely reach out to me and I'll be more than happy to take a look at your policy and let you know what you have. Because most people, when they come to me, I said, do you have a policy? They say, yes. I said, okay, what type of insurance policy do you have? They said, I have no idea. So they don't know if they have term, if they have whole life, if it is a term, how long the term is. They don't know. And I understand why they don't know, because all they wanted to do was to make sure that they are protected. That's the first step. Now that you are protected, if you are protected, we want to make sure that you are well protected. If you are not protected, well, we want to make sure that you are protected. So go ahead, get in touch with me, and I'll be more than happy to give you a quote and to help you get the right type of insurance and investment that would fit your needs. Until next time, be safe.